All right. Next question is from Nick. He says, we are in a home with an unfinished basement. With a growing family, we need to finish the basement sooner than we expected. Saving to cash flow it is possible, but would take time. Could we use a HELOC? And I'm just curious, like, you know, I know we have some stories about HELOCs, like use with caution, but I would be interested to hear what you think of HELOCs and Nick's situation.
Yeah, so we talk all the time about how debt should be thought of as a chainsaw. Like it is dangerous and it can hurt you and it can hurt you very badly. But it is a useful tool. And I think so often, especially we financial mutants, we get caught up in this idea of I can never use debt, never use debt, never use debt, never use debt. And some people do take that stance, and that's all right. However, there are times when debt can be a very useful part of your financial plan. In this situation, you said, hey, I've got this unfinished basement, but my family's growing. And like, this is not like we're putting in a luxury thing. This is something so that we have room for the family so that we can live the life that we want or need to live now. And we have the ability, we have the free cash flow to save for it, but that's going to be at some point in the future. And the way the family is growing, we need it now. What I love hearing, Nick, is that if you have the ability to save for it to cash flow it, that also suggests to me you have the ability to pay the cash flow necessary to satisfy the debt over a finite timeline. So when I think about this situation, not knowing your specific numbers, your specific situation, I don't think it's crazy if you want to use a home equity line or a line of credit to potentially do this, so long as you are like very, very laser focused and serious about how long it's going to take for you to pay that off. Because if there's a scenario where you could save to cash flow it, there's also a scenario where you could save to satisfy the debt rapidly. And I think that would be the approach that I would take if I were sitting in your situation, sitting in your shoes. What you have to answer though is the opportunity cost, the interest cost of having it today worth not having it, saving the interest and maybe paying less for the actual renovation over the long term.
Yeah, I look at my home equity line snafu, mistake, was that, remember, and you said something completely different. I used my home equity line as my replacement for cash. I was access to cash instead of actually having cash. Your question, Nick, is can I use a home equity line for actually improving my home? Man, it's almost like these things are designed for this purpose. This is actually the right reason to use a home equity line, is because you're improving the actual house that you live in. Look, we live in a unique time in history right now, and it will be interesting to see how this all plays out, because we know interest rates are higher. We know housing has gone way up, properties. So because of that, I mean, we've even had this discussion. Bo, you've had this discussion.
Yeah, we're talking about it right now.
If you wanted to upgrade your house, meaning sell your existing home and move to another home, the purchase price is outrageous, and then not only do you have the outrageous purchase price, but you also have the outrageous interest rates on that. So you're looking at your own house and be like, but I could go expand or fix the things in my existing home. Yes, the interest rate on that home equity line is going to be expensive, but the incremental cost
way less
to my family
than the upgrade.
from selling and buying the much higher price point is significantly cheaper. So, Nick, if you've done that type of research, I actually think this is a great use of a home equity line, but begin with the end in mind of the fact that I want you to have a plan for how you're going to pay this loan off, that fits within the financial order of operations based upon the interest rate and based upon your financial goals, so it doesn't derail your financial life. But this is not an access to cash trap. This is you actually using a home equity line so that you can expand your house. Now, I would encourage you, or caution you is probably the better word, make sure you don't turn this thing into the Taj Mahal that exceeds the market value of what you could get down the road. This is something I have to, when my wife and I have done improvement projects, I'm like, there's tile and then there's tile, that you're spending, instead of spending $6 or $7 a square foot, you're spending $35 to $40 a square foot. Are you really going to care that much about it later? Just don't be mindful of what this will do to the market value of your house and try to stay within those thresholds.
And I think in that same vein, be very careful when it comes to a line of credit. It becomes very easy to think about it as this monopoly money piggy bank. Oh, well, okay, well, I have this much money I can borrow, but I only borrow this much, so what's $3,000 more? Okay, I get $5,000. All right. It becomes very easy to become numb to the numbers because, okay, yep, change order approved. Yep, change order approved. Yep, change order approved. Go into it thinking, okay, this is the absolute top amount I'm going to spend. Even if I have more equity that I could tap, I'm not going above this amount. Because what you don't want to do is get there and say, like, oh no, I thought I could have this thing paid off in 2 to 3 years, but now it's going to take me 5 or 6 years because the scope of the project expanded.
Yeah.